In today's video, I have a tiny NASDAQ listed penny stock trading at just pennies. The company has just recorded triple-digit growth and is right at the beginning of a huge growth cycle, yet the stock is trading at just $5 million. So in today's video, I will be looking at Safe and Green Developments, ticker symbol SGD. The company has released some big news recently that could bring in revenues this year that are 5 times the current market cap. Now we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get into it. Safe and Green Development Corporation is a leading real estate development company. They focus on building single and multi-family projects. Safe and Green was formed in 2021 and focuses on development of sites using purpose-built prefabricated modules built from both wood and steel, sourced from one of Safe and Green Holdings factories and operated by SG Echo. As it says here, we are a leading national real estate development company that strives to generate value via development sites made with high quality products through sustainable methods with a mission of efficiency at the forefront. As a fully integrated development firm, we contribute to economies big and small by reimagining real estate from the ground up using creative ideas, eco-friendly methods, and savvy vision to turn land into curated spaces of all kinds. Now that I've covered the basics of the company, it's important to note that they have gone through a lot of changes and SGD is not the same company it was a year ago. What began as a small overlooked developer has rapidly transformed into a vertically integrated environmental and real estate enterprise, one that's now posting explosive growth, restructuring for efficiency and capturing attention in the small cap market. Now, the global real estate market is huge, we already know this, but despite its size, it's still rapidly growing. The global real estate market is valued at approximately $6.8 trillion this year and is expected to grow at a compound annual growth rate of 4.8%, reaching over $10 trillion by 2033. While the US real estate market was estimated at $130 billion in 2024, it has experienced significant shifts influenced by a range of economic, demographic, and technological factors, but is expected to grow at a compound annual growth rate of 4.1% over the next 5 years. So this is a huge market and one that is only getting bigger. Now, as I said a moment ago, SGD is not the same company it was a year ago. It has transformed into environmental and real estate enterprise, one that is now posting explosive growth. Today, the stock is trading at just $1.30 and a market cap of only $5 million, making this one of the smallest stocks that I have ever covered on the channel. Now, if you've been following the channel recently, then you will have seen the great success that we had with small microcap stocks. The likes of ESE gained over 200%, and before that, Buru gained over 400% in less than 2 weeks. And just like both of those plays, there is something significant going on at Safe and Green too. When SGD reported their Q2 earnings last month, they reported a 3,200% revenue growth rate for the quarter. Now, when we see numbers like these, we have to take notice. SGD reported second quarter 2025 revenue of $1.4 million, representing 3,300% increase compared to $42,000 in the same period last year. According to Investing Pro data, the company's revenue growth over the last 12 months reached an impressive 1,500%, though financial health indicators suggest challenges might be ahead. The significant revenue growth was attributed to the acquisition of Resource Group US Holdings, a thriving operator in the organics, composting, and logistics sector. The integration immediately gave Safe and Green a recurring revenue business model and a clear path towards scale. The acquisition was completed in the second quarter. The company generated the $1.4 million in just 1 month since closing the acquisition. Now think about this for a moment. Here is a company that is valued at only $5 million. that recorded revenue of 1.4 million in just a single month. That would equate to approximately 4 million per quarter, which is exactly what management have said. CEO David Villarreal stated that Q2 2025 marks a transformational step forward for safe and green development. While the stock has shown recent momentum with a 17% gain over the past week, Investing Pro analysis indicates the company remains undervalued compared to its fair value estimate. Management expects approximately $4 million in revenue for the third quarter of 2025, which would represent the first full quarter of operations with Resource Group. Now, in a separate press release, a few months ago, Safe and Green issued a letter to shareholders in which they stated two very clear things. One, we firmly believe that the current market capitalization does not reflect the intrinsic value of the company, particularly in light of the strategic direction we have undertaken and the revenue trajectory associated with the Resource Group transaction. And two, we anticipate revenues of approximately $25 million in 2025. So again, here is the stock trading at just $5 million that is expecting revenues of 5 times their market caps. Now, we see it time and time again with small market cap companies that are offering promises of future revenues and future revenue growth. But for SGD, the future is right now, and the stock price has not moved in line with the progress just yet. Looking at TradingView, we can see that the stock did have a huge run back in July, running from around 80 cents up to over $2. But in the 3 months since then, the stock has been very volatile. But there are some bullish signals here. We can see that SGD is consistently recording lower highs and higher lows, leading to this wedge formation, which indicates that the stock could be about to see a strong breakout move soon. Now, when we look at the company's latest financials, we can see that they have total assets of $39 million and total liabilities of $34 million, meaning that the company has over $4 million of stockholder equity. So this is a decent balance sheet. After all, the company is valued at only $5 million. The one concern I would have about SGD is that at a recent stockholder meeting, the company voted in favor of a future reverse stock split. However, this is usually done in order to keep a stock in compliance with NASDAQ's $1 minimum stock price. The stock had been under $1 earlier in the year, but SGD stock has been rising over the past few months, so there might not be a need for them to do this, but this needs to be kept in mind. In the latest news from the company, they announced 2 independent appraisals conducted by CBRE Group, a global leader in commercial real estate services, for its properties at Lago Vista, Texas, and Durant, Oklahoma. The appraisals valued SDG's Lago Vista and Durant properties at a combined $9.9 million valuation, positioning the company for sustainable growth. As SGD's story now blends 2 powerful sectors, real estate development and the green economy infrastructure boom through Resource Group Holdings. Its composting and general soil operations align with growing state-level mandates for organic waste recycling and carbon reduction goals, while its portfolio of properties offers built-in asset value. But guys, what do you think? With triple-digit growth, tangible assets, and operational diversification, Safe and Green is quietly developing from just a small microcap into a solid diversified growth stock that is just at the beginning of its growth right now. But guys, what do you think? Drop a comment below and let me know your thoughts. Remember that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Remember to like and subscribe, and I'll catch you in the